Hi, my name's Barbara Garys from the Champlain Housing Trust, a member of the Cash Coalition in Chittenden County. I've noticed lately there's a lot of commercials and advertisements talking about ways that we could choose to spend our money. However, I know that when I talk to people about what's important to them, what they truly value, people don't talk to me about their vacation, their car, or their television set. They talk to me about home and family. I'd like to take the next few minutes and talk with you about some ways that you can secure your housing, protect your home, and possibly achieve a dream. Think about all the housing-related expenses that you've had in the last year. Things like your rent, your mortgage, your insurance, even utilities. Have you struggled with any of these payments or perhaps been late? If you're currently late on any of your housing payments, we'd encourage you to prioritize getting caught back up. You can secure your housing by creating a plan of action to take care of any of the past due accounts you have and get them paid in full. Think about your housing-related expenses for the last year. Things like your rent, your mortgage, your insurance, or even your utilities. Have you struggled with any of these payments, or perhaps even been late, or have some past dues right now? One way to secure your housing would be to prioritize your housing expenses. If you're currently past due on any of your housing-related, think about creating a plan of action to get those past dues to a point where they're paid in full. And hopefully, you're not past due on anything. In that case, how do you plan to get ahead? Well, again, think of your housing-related expenses. Are there any of these that you could prepay? Things like an insurance policy. Homeowners or renters could be paid for 6 months or even a whole year. Prepaying some of these types of expenses would relieve your monthly budget from not having those to take care of every month. A great way to protect your home is to build a reserve account. A reserve account is money that you would have set aside, a nest egg in case an emergency comes up. A good rule of thumb for a reserve is to try and build 3 to 6 months worth of your housing payment. So for example, if your rent is $700, a 3-month reserve would be $2,100. That would be there in case an unexpected expense came up to give you a little bit of breathing room, a buffer, so you know you'd be able to take care of all of your housing expenses and stay on top of everything. If you own a home, perhaps closer to the 6-month mark would make sense. So if your mortgage payment is $800 and your taxes were $200, a 5 or 6 month reserve would equal around $5,000 or $6,000. Again, if you can't take care of all of these in one lump sum, perhaps create a plan of action where you could set aside a portion of the money that you currently have and create a plan to build the remainder of that reserve. You will so appreciate it when the time comes when you actually need that. So think about ways to secure your housing and protect your home. And if you are currently someone who rents and you have the dream of homeownership, you are so fortunate that in the state of Vermont, there's an entire network of homeownership centers and other housing programs that are available. These teach home buyer education in group form as well as individual counseling that it could explain to you some of the different programs that exist. We are lucky to have loan programs and special grants that might make home ownership an option for you. One example of a specialty grant that could help you with your homeownership goals would be a community land trust or a shared equity program. There are several of these throughout the state of Vermont. One of the ways that a shared equity grant can help you purchase a home is to make it much more affordable. So let's look at an example of a community land trust or a shared equity program. A $180,000 house may be a little bit out of your reach. Most of the land trust grants are equal to or greater than 20% of the purchase price. So in this instance, if the grant was $50,000, that means you'd only have to qualify for a mortgage of $130,000, and your monthly payment would be more than $400 less at $980. A down payment assistance grant can really be the difference for someone being able to afford a home and have a monthly payment that truly fits within their budget. Whether you're thinking about securing your housing, protecting your home, or the dream of home ownership, there are resources that are available to you. Please know that the Cash Coalition's provided a handout that lists several of these community resources that are available to you. Good luck and take care of your financial future so that it takes care of you.